morning, everybody. It's Monday, March 4th. This is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments or would like to chime in on anything we're talking about, please feel free to drop us a line in the chat area, and we'll get to it during the show. Overnight markets here had May corn up 3 3/4 at 428.5. May soybeans were up 9 1/4 at 1160.5. And May Chicago wheat was up 2 1/4 at 560. This morning, the USDA announced a sale of 110,000 corn to Taiwan for 23, and also announced was 126 soybean meal to unknown destinations, 30,000 of which was relegated for 23, 96,000 being for 24. Hope you guys had a great weekend. Good to see everybody this morning. We were talking a little bit before the show just on a little bit of, some change in hands and open interest and, things that have happened in the last week with certainly, as we've gone through option expiration, first notice day. So Dust, I'll shoot it over to you just with some initial market thoughts, kick it around the room as we start the week.
Yeah, thanks, Dan. Yeah, a very sizable shift in holders of corn going into Feb 27th. That's a 3-day delay for the COT report. They released those on Friday. And we know that the funds going into the prior week were record short and heading in that direction towards first notice day. We've talked a lot about first notice day. The clock was set for basis only contracts, different types of contracts like that need to be rolled or sold prior to first notice day to avoid the delivery system. And we saw that happen maybe even just a little bit early. We saw the markets turn around Monday, Tuesday, and that captured the last part of that COT report. That's the Commitment of Traders report that the CFTC puts out on Fridays. And what we saw was managed money liquidated quite a bit of their net short position. So it ended up being about 45,000 contracts net using futures and options combined. And on the flip side, there's always someone on the other side of that position, right? There's always a buy and a sale for any one contract on the exchange. And that appeared to have come from producer merchant, that category. So they actually reduced length by about 39,000 contracts. So it could be, that we're kind of painting our own narrative here, but it could be that it was that basis only contract liquidation was being met almost immediately by funds actually buying out of some of their short position going into that first notice day timeframe. So there's been a little bit of transfer there. We'll see what happens as we go into the next week's Commitment of Traders report. But total open interest did drop 157,000 contracts using futures and options combined from the prior week. That went right through option expiration. That made a lot of sense. But to see that type of a shift, I don't know that it's going to change the managed money short all the way, but it's certainly the first signs of it so far.
Very good. Ben, good morning. Any thoughts there in the East?
Yeah, I would just add to that. I think that Dustin brings up a good point of have we kind of had that event where the farmer threw in his hands and said, "Get me out." Managed money took the other side of it at pretty depressed prices. And I think that corn's got some proving to do that this isn't more than just a post first notice day bounce. We will be hitting up against the 20-day at 433 if we're to get there. So I think it's got some proving to do, some supportive headlines out there. So we'll see if it can grab on. And as we've kind of changed the skew against the heavily unsold farmer to a degree with the price action the previous week, you can see that through the Commitment of Traders. Is there enough incentive or moved enough of the offers out of the way that we could extend this a little bit?
Yeah, that's really good points. I was looking this morning too, guys. There's seems to be a jockeying back and forth. Some private estimates are actually revising upward, their South American estimates, and some continue to slash, based on conflicting opinions of weather and things like that. But Dustin, what's your overriding opinion right now? We're going to have a new WASDE that comes out on Friday. Typically not a real needle mover as we, go through the month of March. We're obviously waiting for planning intentions at the end of the month, but A couple of thoughts there just on what we could see towards the end of the week.
Yeah. So, when we're thinking about this time of year, it's certainly, we're just starting to get into the season for safrinha corn out of Brazil. That's going to be the biggest, I think, impact to watch as we get into April, May. It's still kind of early there. We are looking at precipitation anomaly as not that bad for second season right now. It's almost 100% normal for the 2-week forecast. So I don't think there's a huge story there, even though it's been dry to start. They are going to need some more rains. Just like over the winter though, for the first season soybean crop, we don't want to get too overly invested in the early forecast just yet. I will say it is that time of year though where the market generally tries to be somewhat supported to convince acres. We are pretty far below the cost of production for corn, especially corn, and university data confirms that. We've seen that a lot anecdotally. And the question becomes, does the market care, to provide profitability or not? I think to a degree it does for, year to year. We're still going to need, the incentive for U.S. grower, but it doesn't need to be overly profitable. I think if we go through April, May, that's still going to be our best selling opportunity is into June. Typically we see some sort of chance for profitability. It's not typical to be like, this far below cost production for the entire year. So it'd be more seasonal strength I'd be looking for than it would be South American weather issue at this moment.
It's very good. Ben, anything on the cash side in the East? I know there's,
Yeah, grain is moving. There was a slight improvement on river basis levels, but in the interior, it's been very little. As a matter of fact, it faded slightly in some places. So I don't see any tremendous market movers there. I don't know that this plays into that, but I will tell you a lot of plenish beans have been called in the last 2 weeks, 3 weeks across the entire region. So I don't know what the motivation is for that, other than they need them, but that is one outlier that's happening.
Very good. Brian Williams, I'll throw it over to you too. Have you seen anything? I mean, you handle a lot of our cash movement there in, Iowa, Minnesota, Wisconsin.
Yeah. Actually, the Wisconsin guys are actually trying to think outside the box a little bit there, and if they can get trucking in line to where it makes it still profitable, they've been moving stuff to that northeast Iowa area. Seems like that area was, pretty dry for the most part of the growing season this year. So basis is hanging in there and actually getting some pushes along the way too. So if anyone's looking to move something, give us a call. I can look up some areas for you.
It's very good. Rylan, we'll throw it over to you to start the week. I noticed funds bought a pretty significant amount of hogs and bought a little bit of cattle there on the end of the week report. So what's your thoughts as we go forward this week?
Yeah, it's kind of a late week recovery in the livestock in general, but definitely in the cattle. Cash came out way better than expected. I think for some reason there was a lot of doom and gloom just because the slaughters have been so light, but slaughter ended up being up 1% for the week. So, I think that was given a lot more confidence just to the potential seasonal direction of the market. We still had beef prices up. Choice was up 108. So, I mean, overall, it just kind of feels like, we're trying to make that push. It just, even when you think that this thing's going to turn around, we recover just late. Open interest, a lot more interest kind of gaining in June. That was the big volume as far as open interest leader on Friday. So I think we're probably seeing a decent chunk of hedging in that time frame now. But it still feels like the funds are really going to stick to the April contracts for right now. So, I mean, there's definitely a more positive seasonal mentality right now, especially with the weather doing what it's doing. I mean, it was nearly 70 degrees pretty much here around the Chicagoland area all weekend. And I mean, as you can tell, I got a little sunburn going on, but it's a little bit strange, but we know that that's definitely kind of keeping things moving here for right now. So it's just hard to argue with the trend right now. And like I said, I think it's just kind of a more stay on the defensive side for the producers, but still, there's going to be some good opportunities here, especially as we get closer into the summer.
Oh, very good. I appreciate that. We had a question come in. Good morning, Nick. Hope you're doing well. Dustin, you could probably take this one. What site can growers go to for the levels of the Mississippi River? I know we track that pretty closely.
Yeah. So it's I think actually the quickest way to get there is just Googling Memphis River levels, and it will actually take you right to the nationalweatherservice.gov site. The very first link that pops up on Google. So right now we're still at 7 feet right now, which is well above the low stage. I think we were hitting record at Memphis was -12 this year. If I remember correctly, it's -11, -12. So we were hitting record lows, and it projects all the way out through March 17th. So high level, will be March 9th at 11.4 right now. But that's the best site that we see for the projections.
Oh, very good. That's thanks for the question, Nick. Slow news day here, guys. So not a lot of fresh info to bring. We got a couple minutes before the open. Anybody with parting shots as we start the week, things to look out for? We're back on a regular schedule. We got export inspections today, ethanol on Wednesday, sales on Thursday, and then obviously, like I mentioned, the USDA report on Friday.
Yeah, I'll chime in on that, Dan, because
Sure.
CO2 report. I think I talked a little bit about it, but yes, the funds bought corn. They did sell soybeans and products from the prior week, however. So you did see a fairly large drop in the ratio, and that would be NOV 24 beans divided by DEES 24 corn. That ratio in particular, what we're talking about, historically going into the planting window, anywhere in that 2.35 range is what we would typically say is normal. Anything closer to 2-to-1 would be like your 2012 type of years where, corn values are just really high compared to beans. And then 2.65-to-1 would be beans, very high value to corn. So we did see that hedge fund change in open interest there, where they sold beans and bought corn. That did result in a fairly good drop in the ratio. It took us back down to the lows for 24, or near the lows for 24. And that will just be something to watch here. If we see that ratio, kind of down below 2.35-to-1, that's going to be more favorable corn. If you're seeing it back above 2.5-to-1, I still think this is the type of year where, the lack of export sales we've seen for some of the cancellations we've seen for beans, the fact that Brazil is still looking at a fairly sizable crop this year, that just kind of influences us a little bit on how fast we are to either pull the trigger on beans or corn if we're trying to raise total farm marketing, or for a grower that might be closer to a 50-50 rotation. So they have had an impact. We know that if they're starting a trend where they're starting to sell more beans and buy more corn, that's just something to watch for them. And that maybe give us some corn opportunities here soon, because this is one of the lower ratios we've been at in a while.
Very good. That's good stuff. We coming into the open here this morning, we're lining up pretty much in line with the open. They've got May corn looking to open right around 428.5, which is where we went off this morning. May beans just a little lower than where we settled this morning. About 1160 is where they're looking to open. And the May Chicago wheat, once again lining up right with where we're opening. So with that, guys, we will send everybody on their way. We are streaming live every day on X, Facebook Live, and YouTube Live. Every day that the markets are open, 8:15 Central Standard Time. Jack's going to be in hosting tomorrow. He's going to take care of the show and do a great job. Last update here. May corn up 5, 429 3/4. May soybeans up 9.5, 1160 3/4. And May Chicago wheat's up 3 3/4 at 561.5. Hope everybody has a good start to the week, and we look forward to talking to you tomorrow. Thanks a lot.
Thanks, Dan.
Thanks, Dan.